Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. And today we have a guest in Mike Konnert from Vizsla Silver. And I'm really happy to have you here, Michael, and have you as a sponsor of my work. It helps me to create content about Vizsla Silver and all my other commentary that I'm able to provide to my audience at no charge. So thank you for that sponsorship and thanks for joining me today.
Yeah, my pleasure, Al. My pleasure, Alan. It's great to be here and happy to support your show. You've really understand what we're doing here at Panuco and at Vizsla, so it's excellent to partner with you.
Well, having spent the last 9 years of my life down here in Mexico, Mike, I've spent a fair bit of time sharpening my pencil on epithermal vein systems because they are so prolific and money-making machines down here in Mexico. And not that you're a sponsor, I would say this if you weren't a sponsor, but the project you have is pretty phenomenal when you look at the internal rate of return and the low capex and the fast payback. You don't have to take my word for it, folks. Go out there and find me anything that using today's prices has triple digit IRR and a low capex that is, in your case, about a third of your market value. And so it's obviously well within your reach as a junior to develop that project. That's
Yeah,
very unique.
exactly. And the fortunate thing is we're into a bit of a difficult market now. I wouldn't have said that a week ago or 10 days ago. We would have been popping champagne and saying it's the greatest market, known to man in the gold space. But it's amazing how quick things can change. And you often get criticism raising money. People say, "Oh, you should wait till a higher price," and things like that. But we raised money back in September, and we were fortunate that we were able to now have a balance sheet that's well over $100 million US. So, part of that capex, half of the capex was so more or less is in the bank right now. So very few companies like ours, in this stage of development or exploration, can say that and can have these types of balance sheets. So that really helps. I think it de-risks or creates a more of a buying opportunity when the stocks are down like they are over the last few days. Because that we're not going to have to come out and raise money again in the near term. So
Well,
very very thankful for that.
there's a reason that there's an old saying in mining that if they're trying to give you money, you should take it.
That's
Uh,
right.
in this industry, things can go up and down really rapidly, as we've seen. Although I'm very confident about the fundamentals of what will drive gold and silver. So, a 1 week trend after such a powerful move, I don't think is something to get too worried about. But people look at prices on a day to day or minute to minute or second to second basis, and they seem to
Well,
form their confidence or lack thereof based on what the fluctuations are.
exactly. And people find it very addicting as well too, right? To look at things like you said, second to second, minute to minute, refreshing the real time quote every 10 seconds. But in reality here, you don't buy a company like Vizsla or junior mining companies, for weak action. You buy it because you expect it's going to go up over months and years. And certainly we believe that with Visa, we're building a business versus just a stock chart. Although I think the business that we're building is going to be very favorable to the ultimate share price that we see here at Visa. So it is hard. I'm an investor in these companies as well too. And when you see your portfolio down double digit percent in a day, it's never that fun. But the opposite can happen, and with much more upside leverage. So you got to take the good with the bad.
And you kind of brought up something that's been on my mind a lot lately, Mike, is that I've been to hundreds of mining conferences, and I see the speaker roster and I see all the people that go into that room. And I see how in the room where all the companies are that pay for the conference have way less traffic. And I kind of sometimes think that they have it backwards because a lot of what I've done over the years in my reports is because I am pretty good at seeing rocks and trends and numbers and whereas a lot of newsletter writers they don't have that kind of experience. There are a few, and so when I look at this sort of big picture of a conference, I think, man, you investors should be spending more time with these companies because these guys understand rocks, they understand the business, they're investors. And if your goal is to be learning how to be a good stock picker in this industry, I think that the executives of these companies can be very good teachers of what to look for.
No, I agree 100%. And, in addition to Vizsla, I have a company called Inventa Capital. And, the idea there is that we share back office space and administrative space and, things like this across a number of different companies, basically to keep costs low for companies that we're involved in. But we also use Inventa Capital as a way to incubate and support excellent entrepreneurs in our space. So we look at things a little bit differently. I look at things as an investor rather than just some guy that's running a company. I put myself in the shoes of the investor in every case, and try to think from that perspective. So when it comes to Vizsla, of course, I was the first shareholder. We've always marketed the company very well, and that's the reason why we're able to raise capital, at higher and higher prices each time and minimize dilution and these types of things. It's the reason why we spun out Vizsla Royalty to Vizsla Silver shareholders, and Vizsla Copper we spun out earlier as well. So, I always like to think, well, I am a shareholder, but if I was a retail shareholder, how would I like the CEO treating me? And I think that's an important distinction, an important thing to keep in mind. But you're right. In our case, we look at not me. I'm kind of busy, certainly busy trying to build the world's best silver company. But we have a very good collective group here at Inventa, and so they're often filtering through different opportunities and looking for great projects. So we do see a lot of interesting opportunities through Inventa.
So you kind of hit on some real subjects there that investors should be looking at as well. I'll summarize some of the points that stood out. One of them was that you talked about how you kind of bring into an umbrella as an incubator other companies so that you can keep the cost, the G&A cost down. A lot of companies these days, sometimes they have a great project, but they'll have a blown out share structure. And part of that is because the G&A, they're trying to do it all on their own. And it's not because they're foolish with their money or greedy, but it costs money. It costs like $1 million a year these days to be a standalone reporting issuer, regardless of what you're doing on the project. Then, if you want a couple of really good people involved, you got to pay them. They got to live as well. You need lawyers, you need accountants. And so that umbrella is something that's important just because it helps companies to keep down G&A.
Yeah, absolutely. And it's something that where, if you find a start, what we love is to find, they don't have to be young, but, a young CEO or an entrepreneur who has an idea, who maybe just doesn't have, the money himself, or, wants to bootstrap things, but has a very good concept or a very, very good project. And, I've been in that situation where, you want to keep your costs low. We I don't know, a couple $100,000 we ran Vizsla on in the first year or something like that after taking it public, and a lot of that was on my credit card and things like that. So I know what it's like to be in that position where you really have to squeeze every penny and make sure it lasts so that you can spend money on the ground instead of offices and $300,000 a year,
And you
CFOs,
end up
et
having to
cetera.
wear a lot of hats. You're kind of a CFO, you're a bit of a lawyer, you're a marketer, you're a psychologist to your shareholder.
Yeah.
And that's something that I think is ammunition for an investor to know about these trials and tribulations and why you do things the way you do.
Yeah, exactly. And really, and the thing that I didn't really appreciate when I was really entering the business was that first, I mean, the most important thing about these companies is people. People are the reason, the rocks are there, but the people kind of make them work. And you can ruin a bad project or a good project with bad people. And so it's so important to reach out to management teams. And that what I didn't appreciate early on in my career was how accessible management teams are, and people, they want you to call them. There's an any good company should have an investor relations person, and if it's not an IR person, it's the CEO. But they want to speak to prospective shareholders, and they should prioritize making time for that. So, one of the things is it's pretty easy these days with even Twitter and company websites and Zoom meetings to really have a chance to get to know management teams. So when we look at companies and projects, management teams and people is the most important thing. And you want someone who has that drive, that desire to succeed, that's put their own money into the company, these types of things. And then, of course, we look at the project. And my partner Craig Perry. So Craig and I
I
started
wanted
Inventor
to
originally.
expand on that a little bit before
Sure.
we get into some of the people you've worked with, is that not only do the investor relations and the management like to talk about what they're doing. I started in this business in 1993. Mike, you probably were a pretty young guy back then.
I was, yeah.
And what I found over my time is that, like, I came into the business in what was called the lost generation. The 1980s, the post 1980s, the 90s were very hard on the business. Not a lot of people were entering the business, and some of these guys that had been into it for a couple decades were getting pretty old. And what I found was that there wasn't very many people when I didn't have as many gray hairs in the business in my late 20s. And what I found is that geologists just love to tell you and teach about geology and what you're doing. I mean, I had, like, if I could put together a group of professors for people to learn, I had that opportunity. Gannon McDowell gave me my understanding of geophysics. At one time, he was the world exploration manager for Anglo.
Mm.
Imagine having go in and say, I'd like to learn about geophysics. I'd like to get the guy who ran the geophysics program worldwide for Anglo. On geochemistry, I had a wonderful mentor in Bob Barnett who did all the geochemical work for the great diamond mine Diavik before discovery, helped in the discovery, and did the mineral analysis post discovery. And one of my mentors in geology was a guy named Bob Darney. Unfortunately, he's no longer with us, and that's what can happen, folks, with this knowledge base that we have. Is the time waits for no one, but Bob Darney taught me what I call the Bob Darney trend. And what he said to me, and this applies to you, which is why I'm bringing this up. He said that every project starts out really, really big. And then when you put drill holes into it and science into it, they tend to get really, really small. and But mines are different. in that when you put more science and more drilling into them, they get better and better and better. And the second part of the Bob Darney trend is also very interesting relating to Vizsla, is that he said that mines tend to come up with really pleasant surprises. And Copala was a blind vein, didn't come to surface. You were drilling for another vein and you found that vein. And so you're passing the Bob Darney test or trend on both sides. It's getting better and better and better, and you're getting these pleasant surprises.
Exactly, and that's when we started to know this was special, when that was happening, where our expectations were being exceeded, and it was, very special how that happened to us. So um, certainly passed both sides of those tests, and of course the project continues to get bigger and bigger outside of just our original project area, project number one. So absolutely agree with you there.
And I interrupted you when we were kind of in the middle of talking about the what you do as a venture capitalist. And so,
Yeah, what I was gonna say is, so Craig Perry and I started Inventa Capital together back in 2017. Essentially, the same day that we incorporated Vizsla Resources at the time, I incorporated Inventa Capital. And Craig came from Australia, where he was involved with um, a company called Tiger's Realm, and the founder of Tiger's Realm was Owen Haggerty, and Owen and Craig and Tony Manini worked together at Rio Tinto, and Owen mentored Craig, and basically there is a mantra that we've kind of adopted from the Tiger's Realm group and from Craig's time there, which is size of the prize, cost of the test, chance of success. So when we look at projects, it has to have a very big prize size. It has to be something that's world class. So we're not interested in, as you say, a mine that's really just one small little vein, or one little adit or something like that. We want to see something that's world class, like we see here at Panuco, right? That's very important for us. The cost of the test, we're not interested in going up into the middle of nowhere, none of it, and drilling $2,000 a meter holes. That's not fun for us, especially because we fund these things pretty much ourselves and with a small group of people. So it's not really OPM, and we always think about these things as really the initial funders. So it's very important to think about the cost of the test, and then of course the chance of success. Is this something that if we are successful, first of all, are we going to be successful? Is it possibly successful? But if not, we just need to really understand, what the odds are when it comes to the project.
so there you've talked about some of the pillars of what you do as an incubator. Try to keep the G&A cost low, bring together good people, and look at projects through the filter of size of the prize, what it'll cost you to do it, and these sort of things in evaluating projects. I think investors would be good to do the same. Mike, you kind
So,
of I don't know if you're having internet problems, but are you still there, Mike? I don't know if we've lost Mike. Oh, I think I think he's logging back in. Oh,
oh,
logged in, logged out.
oh, I'm here. There we
Ah,
go. There we
there
go.
you
Sorry
go,
about
Mike.
that.
So there
Uh,
you've kind of put together the pillars of what venture capital means. It's not just about putting money in. Money is one thing, but then advice. Companies need good advice, strategic advice, technical advice, corporate advice, strategic planning, marketing. And so those pillars you're talking about are things that investors can think about as well when they're looking at this. They can be their own venture capitals, angel investor.
Exactly. And then this is, I think, an important context for you and for your listeners as well, to your viewers, is that, you know, the first P is people, the second is project, and the third is promotion. You know, you could have the greatest CEO on earth, you could have greatest project on earth, but it doesn't matter if nobody's heard of it. So, you know, for me, I always, you know, wake up thinking about who are we going to tell about Vizsla Silver today, you know, and it's not just me. We've got Sean Ward on our IR team, and we've got Mike Pettengill, who's currently traveling the world right now, you know, talking to institutional investors. So we, you know, and Simon Smirlik loves to, our COO, and Jesus, we all love to talk about Vizsla. So, you know, the last point there is that, you know, you have to be able to tell the story. If, you know, you're going to be marketing a public company, you have to be active on that, and someone needs to think about it all the time to get the story out there, because so many times you have this great prospect, this great company, but no one's ever heard of it. And I recommend, you know, doing interviews with people like yourself, Allan. It's
I
important to get out to you
It's
know,
part of the
informed
reason I
spaces
do this stuff. In the in the words of in that movie, always be closing. Sometimes I wonder if the mining sector people really get it, that what that means to us is always be pitching. And these days, there's no excuse not to. You've got podcasts, you've got video, you got things like X.com. And I look at the success that Trump had in this recent election. He basically said, I'm not interested in traditional media. I'm not really interested in spending money on advertising and all that. And he really focused in on using those digital marketing tools. And regardless of what your politics are, that there's a business lesson to be learned there in where we are today and how to use those tools, because it gave him a landslide victory that not many people thought would happen.
Well, 100%, and you can reach so many people, you know, just with an internet connection and an iPhone these days, right? You don't really need to go to. I mean, conferences are great; it's very important to do that, but you know, you can use digital tools to supplement any type of typical investor relations activities.
Right. Well, something that I always recommend when I wrap up my shows is for people to do their own homework. And I wanted to sort of share with my screen and show people how I look at your news releases and your corporate presentations, and that will lead to us to have a little more of a discussion here. So, take for example the news release, the one on your results on October the 1st. When I see most investors, they look at the headline, Vizsla Silver, additional high grade silver and gold through ongoing filling. Then they read they read the first paragraph. They read the highlights. Wow, 4,500 grams per ton. It's great stuff. Yeah, 5.6. Good, excellent. And that's really important stuff. That's why it's a highlight. Then maybe they get to the news release. But how they look at the news release, for one thing, in this first sentence, you say, the latest round of infill drill results continues to support improved mineral continuity along the cupola structure. Well, when it comes to a mine, you use the specific word there in continuity. Tell us why you use that. I could tell people why. Tell us why you use that in your first sentence, Michael.
Well, I think that's really the takeaway here. You know, we're far beyond just splashy numbers. You know, these numbers are great, but you know, we're thinking about a mining. We're thinking about this through the lens of mining it. So, what you want is continuity on a structure like this. You know, the grades are excellent, 5.5 meters at 4.5 kilos. That's, you know, eye-watering stuff, right? It's you know, we're talking about 3 ounces of gold in a subsection there. It's just It's beautiful, but we want people to understand that this is infill drilling, and we're having higher confidence, in the spaces between previous drill holes, and there's continuity in the structure, which means steadier cash flow in the future. It means a mine that's more profitable.
And from an exploration perspective, continuity leads to predictability. And so when you drill with predictability, you tend to save money and hit what you're shooting for.
Well, exactly, and we're certainly at that point here with Copal. We're definitely at the point of being able to predict. I'm certainly be very accurate with our drill holes. We had very few, NS non-significant results here. So we're very with Copal. It's certainly very predictive. Napoleon was the same way too when we were drilling at depth. But we're also able to use what we've learned from Copal, Napoleon, Tajitos, and other veins, and make new discoveries and hone in on the mineralized core of these veins versus wasting money drilling around it, as we did with La Luisa. So to your point, you hit the nail right on the head there. We're able to be predictive with our exploration, save shareholders money, and be more effective with it.
Because, folks, in these epithermal vein clusters, one, they're usually found in a cluster. And secondly, they're like a boiling zone, or look at this pen if you can see it. And, they'll have distribution of grade. If you're above the boiling zone, you got nothing. But that's not necessarily a bad thing, folks. It tells you that you've got a vein and, you're in the breccia unit, so it's all broken up. Keep going deeper and magic can happen. It happens all the time it happened with First Majestic at their Ermitaño mine. It had a surface outcrop of half a meter or something like that, or even less, and nothing really to speak of in the top of it. They drilled down 150 meters, and boom, they hit 2 ounce or an ounce per ton gold equivalent. And that's the way these things work. But why this is important is if you have a bunch of these veins and they're all related, where you target you find out, okay, here's the boiling zone of Copala and here's the boiling zone of another known vein. Well, when we find another vein over here, we know where to target that.
Absolutely, and of course we've got so much to see across this district too. So we're just getting started on going back to the exploration field, and all this information is very very helpful as we drill the extension of Animus and we look to the San Dimas area with further exploration.
And so here you go. Okay, so what you're starting to touch on there, Michael, is the reason that people should read into these news releases, because there's a lot of great stuff in this. So I'm gonna actually zoom out or get it tighter there. Okay. So here's your project, right? This blue square here is then represented over here. Okay. So we can look in at this square and see, okay, wow, here's the Copala, here's the Cristiano vein, Cajitos vein, a bunch of other veins all over the place. But bear in mind, folks, that's just a postage stamp of a whole bunch of other veins that have never been, they're known, never been touched. And you've got a company making asset right here in this little postage stamp.
Well, just Copala vein, it's on its own, I think will be a top 5 silver equivalent producer globally. Just what we're looking at there on the left. So imagine what else is lurking, undercover out there. And it's
Well,
not like you just
actually,
fly over and see these veins. Of course, it takes a little bit of work. So there could be something much better and bigger than Copala out there waiting for us. We just don't know yet.
well, and you didn't know with Copala because it was a blind vein. you were looking for something else and you found Copala in this little postage stamp here. I'm going to keep making that point for people to go.
Well, and it's statistically unlikely that we found the best first. I think it's much more likely that we found something very good early on, but certainly not the best that's out there. So you're right. It's world class mine sitting there in that postage stamp, which is just Copala, which will be a top five silver equivalent producer. But we have yet to scratch the surface. Another way to say that, it's less than 5% of the known veins that we have in the main district. And then we also have another 20,000 hectares outside of that that we've just added on this year. So, and we're going to continue to expand our land package in this region. So, what I like to think about this is like going back to the Fresnillo district when it was nascent, and having first pick down there. And I'd like to think that we're replicating something very similar here, and we're just maybe 300 or 400 years a little, after some of the low hanging fruit has been discovered in Mexico.
Well, and there you go. Like I know a lot about that because I live 50 miles from Fresnillo. And Fresnillo, the cluster of in and around the city of Fresnillo is only about 3,000 meters by 2,000 meters. And there's got to be 20 veins in that area. And then they went about 1,000 meters over and they found the Saucito cluster. And to put that into context, folks, these are the assets owned by Fresnillo that makes Fresnillo PLC the lowest cost producer of silver on the planet. So they had the cluster at Fresnillo City. 1,000 meters away or so, they found another cluster, which is the Saucito cluster. And then one of your advisors followed that Saucito cluster and found Mag Silver and Juanicipio and Valdecanas. And folks, Valdecanas and Juanicipio were blind veins as well. So if you could put all of what I just described inside of your claim blocks.
Yeah, exactly. Well, exactly. Just this original claim block. So, we have La Garra to the north and San Enrique and El Richard to the south, and we filled in a ton of other ground. So, we're very bullish on this region. We're very well funded to get this main vein here, Copala, into production, and then use that cash flow, which will be enormous cash flow in the first several years, and the multiple 300 million plus USD in free cash flow. So that buys a lot of drill holes and a lot of exploration. So we want to be here for generations, building the next best silver company.
Well, and when you think of the fact that, okay, even if you look at this postage stamp here, that as Michael said, only represents 5% of the project, before they were drilling for something else, this wasn't even in. You could look over here and something like Copala wasn't even in the picture.
Yeah. Well, and that's we're drilling the southern end of Animus right now. We're drilling the San Dimas Camellia, which is a little further south of that area. And these are areas that we're exploring this year. Oftentimes, and I don't think this is the case with Vizsla, because this is something that we're well funded for. But oftentimes, companies in our stage, it gets a little bit boring once you're trying to go into production. You've got feasibility study, it takes 2 years to put out. We'll be about a year from PEA to feasibility, so that's much quicker. It's much more exciting. Plus, the feasibility is it's all about massive cash flow and potentially, well, very high single digits or double digits of IRR, potentially triple digit IRR. But so that's exciting. But at the same time, we want to show that there's a huge amount of upside in this district. So we're continuing to explore, continuing to try to make new discoveries, and I'm confident that we will make new discoveries. So it's going back to our early conversation. This is the type of thing that you want if you're an investor. You want the company to think about, well, how do we make sure that the capital markets and investors don't just forget about a company as it moves from exploration into development and into production. So it's really important for us to, of course, add value with the drill bit, but also make sure that we're generating steady news flow as well.
Well, you bring up an interesting point there because I've long been a fan of the Lassonde curve. And there's two big spikes in the Lassonde curve. One is when you make exploration success and when you bring something into production. And there's a lull or a valley between those two mountains. And that's what's called the development discount window, or some people call it the orphan phase, or some people call it the boring phase. Now, in the context of where we are right now, I think that people are not looking at the development discount window the way they should, because the majors are struggling to increase production. They're struggling to replace their old mines with new mines. Did I get, yeah, old mines with new mines. And the whole Lassonde curve is broken from the small grassroots exploration through to production. So what that means to me is there's two things that you brought up that I think are really important. I don't think the development discount window is as boring as many people should be looking at it, because as the price of metals go up and mergers and acquisitions happen, where do they go? They go to the development discount window. So you've got an opportunity to make money right there. But secondly, and this is specific to Vizsla, is that how much you can compress that development discount window is really important, because that gets you to the sweet spot of the second wave of the Lassonde curve. And you have a project that you can narrow that development window down to a couple years, and while you're moving towards the sweet spot, you still have a bunch of ground over here that really, to me, is like an explorationist dream project to keep pounding away at drilling. So you kind of bringing projects up the left side of the curve while you're moving quickly towards the sweet spot of the second side of the Lassonde curve.
Exactly, and we call that the expedited pathway to production. And the key point here is that this is a project that's, I mean, that Lassonde curve would probably be more applicable to a project like Sabina's Back River, where you have whatever 500 to $1 billion capex. It's in the middle of nowhere, not a lot of infrastructure. But for a company like Vizsla, where we have a lot of the equity portion of the capex finance right now with their balance sheet on hand, we've shown that we can raise a lot of money. We're moving very rapidly to put a project that sits literally underneath power lines off the side of a highway an hour away from Mazatlan into production. I think that development discount doesn't need to apply here the same way. And of course, we've seen that with Silvercrest. Silvercrest performed very, very well, in that whole period of PEA to construction. They actually, I
That's
think,
when
hit
I
their
picked
all-time
them,
high.
Mike. That's when I picked them when they were in the development discount window, and have followed them through and recommended them many times, and now they're getting taken over. And that brings up another topic. If you look at the companies that have precious metals projects in the development discount window, there's not enough of them. But how many of them have IRRs that, using current prices, are in the triple digits, that it's a third or something like that of your current market value, that have a project that is within the reach of your company, especially when you've got almost half of the capex in cash.
Yeah.
So this is another thing. When you're looking at projects in that development discount window, these are variables that you should be considering as an investor.
Absolutely. I couldn't agree more.
Well, I think the market does as well, Michael, because you are cashed up so well. You do have a valuation that is a few times higher than your capex. This is a these kind of projects don't come around very often, folks.
No, exactly. These are the type of assets that mega companies have been built on, Agnicos and the like. It's truly a cornerstone asset, and we're fortunate enough to have it in our own single asset company. So you get full exposure to these types of successes.
And we earlier we were talking about that postage stamp. But now before I leave this news release and show people why you should keep scrolling and look at this information. So bear in mind, folks, this was a blind vein that they found when they were looking for something else. And look at what sits underneath that. Cristiano, Copala 4, Copala, Copala 3. This is like now we're going even into even more of a postage stamp and look at what's there.
Yeah, exactly.
So going back to this one up here, again, folks, we're just looking at a postage stamp inside of a place where you've got all of these known veins coming to surface, and there could be more Capalas sitting underneath over here and all around. So what I'm getting at is not only does this project have phenomenal metrics on the resource or on the PEA, but it's wide open for exploration. Here, Michael, what I've done here now is so now I love this picture. I've been on this road. I've been on this highway going from where I live to Mazatlan. And so here you can see some of the structures that are just beautiful, beautiful place to be looking for a mine, Michael.
Yeah, absolutely.
So there you go, folks. There's your infrastructure right there. And you can't see it, but there's power lines go high tension power lines, right, Mike?
Absolutely. Yeah, exactly.
So high tension power lines going right along this highway, you really couldn't ask for a better place to find something like a Panuco.
Well, and I think if you go scroll down a couple slides here, we have a great plan layout of the uh, PEA area, that postage stamp as we were talking about. I think it's worth. I think it might be the next one. Let's see here. Next one down. Maybe the next one.
More?
Yeah, it is more. I guess this is the PEA webinar, but I think we should have a slide in there that is a plan layout just further down. There we go. Yeah. So this shows the highway. You can see the roads running there, and you can see high tension power running over as well in the yellow high voltage power lines. So
Oh, here's your high voltage.
yeah,
Here's your highway. Yeah,
that's right.
federal.
That's 40D. That's the toll highway that you were pointing out with that. I mean, they built that. It's a beautiful highway to drive. They've got some incredible crossings and bridges. I mean, the tunnels are out of this world. So
Yeah, really
uh,
cool.
all that experience for mining over the last 400 years, helped the local people know how to tunnel, I think, quite well. So, and then you can see, right off of the road, we have the processing facility just right off of Copala, and this
Oh,
is
right
why,
here. Right
yeah,
here.
exactly. So this is why, you can have such a low capex and have such a high return because you have, just a huge, thick structure like Copala that's continuous, as we talked about, that's high grade, as we talked about, sitting very close to surface, right below where we're going to put the processing facility, directly beneath high tension power, right off of the road, um, rail line in Mazatlan and Deepwater Port. So all these things play into,
Yeah, you keep
this
following
project.
this, folks, for another 40 miles or something like that, and you hit Mazatlan.
Yeah, yeah, exactly. So, it's no wonder because Mazatlan. and all of these roads were built around the historic mines. It's it's all it's because of the mining history of this region. But of course, Vizsla is just the first company to have consolidated it and made these discoveries. So it's all here
Actually,
waiting for us.
as you go around Mexico, the history of why these cities were built kind of it's like they did the prospecting for you. They were built
Exactly.
around mines. The best place to find a new mine is where there's an old mine. And that's what Mexico is made of. It's kind of the reason why I moved down here, Michael. Being a mining exploration guy from Canada and having spent time on planes and helicopters and seen the massive cost when I came down here and I drove around to projects and I could drive right onto them with the vehicle and see power lines going right beside them, it was like, oh my God, this is like a miner's dream.
Absolutely. Couldn't agree more.
And here's so we see this big road here. This is the highway that's right beside. But even in where you're exploring with the drilling, there's a network of roads here. You guys have never had to build a road for any of your drilling.
That's right. Yeah, we've used existing, small tracks and small roads and trails and everything as needed. But even for the processing facility, we would not have to build a road, just upgrade one that's existing there.
Wow. Well, Michael, we touched on a lot of great subjects here. I'm going to get off a screen share. One thing I got to do is come down and I mean, you're an hour and a half for my project. We're gonna have to plan to so we can do one of these videos and take the camera down and not just look at pictures on your presentation and your news releases.
Well, I have an idea on that. I think we can do that soon. So let's try to tee that up.
Awesome. Okay, well that sounds great. So again, folks, I wanted to, I'm trying to make these a little bit different, some of these interviews, instead of being like a corporate presentation speech. I like to be able to pick the brains of executives like Michael and what he's doing with Vizsla, as well as his venture capital company, because I think there's great lessons for investors to learn from guys like Mike and other executives that I interview as investors. So, Mike, did you have any closing comments for us?
Well, no, I just wanted to say thank you again, Alan, for having me on your show. I appreciate it. We're very happy to sponsor, and like we talked about, let's get you down to site soon.
Sounds like a plan. So there you go, folks. Uh, I'm really understand I'm biased in that, they sponsor my work, but my whether I'm looking at a company as a pick or a sponsor, they all fall through the same filters. And Mike touched on those. It's project, people, and promotion. Uh, these days, projects have always been number one in my view. The second thing is quickly becoming is the important of promotion. I don't think a lot of great companies do it really, really well in the mining space. And so I think that those three P's are really important and they are the ultimate filter. And the company doesn't pay me to have my opinion. That's built on 30 years of doing this sort of stuff. And based on my experience, finding a project like Panuco with the metrics that they talk about in their preliminary economic assessment, and then how wide open the project is for exploration. Folks, this is very, very difficult to find things like this in the mining exploration, development, and mining space. And don't take my word for it. Go out and do your own homework. you find me something that has something like this, and I'll talk about them on my show for free. There you go, folks. Do that homework. Speak with your financial advisors before making any decisions. Have a great day, and we'll talk to you soon.